Hi, I'm McLean Wilson with Home Coast Capital, a commercial finance company based in Charleston, South Carolina with a nationwide footprint. Today I'd like to go into a little bit about how to take your company from ground zero through the sales process, the financing process, and take it to market. Most typical entrepreneurs will start out with either one, a great product or a great idea, and immediately they want to think, well, hey, I need to bring in some outside equity partners in order to, one, get my product made, and two, get it to market. The first thing an entrepreneur needs to do is sell. So once you have the product perfected, you have the sales side worked out, you can come to a firm like ours, and one, we're not going to take any equity, and we're going to help you create your product, bring it to market with little to no out-of-cost funds for you. And to back up a minute, kind of explain how that works. So let's say you have a great product and there's a huge demand for it, and now you have Target, you have Dollar General, you have all kind of different stores knocking on your door, yet you have no money to make your product, and you're starting to worry you're going to miss out on a great opportunity. That's when Home Coast could get involved. Once you secure a purchase order from a high quality debtor, like a Target, a Family Dollar, a Best Buy, we can come in, we can finance that purchase order. So day one, you bring Home Coast a purchase order. We are going to help you get your product created. Let's fast forward and say 30 days later, your product has been completed. It is now ready to go to the stores. Well, just like any large organization or large company, they're not going to pay you the day that it hits their docks. They're going to hold out on you because they can, and because they typically pay on net 30 to net 60 terms. That's when Home Coast is going to come in on the other side of the process. Now keep in mind, Home Coast financed 100% of the making of the product, so you're zero out of pocket at this point. Now that your product has arrived at the docks, we're going to come in and we're going to buy that invoice from you. So day one, once it hits the docks, we're going to buy that invoice and we're going to advance more money based on the value of the invoice. So let's say your product was for $100,000, it cost $50,000 to make it. Day 30, your product hit the docks, so $50,000 has already been dealt out. We're going to advance you another 30% to bring the total up to roughly 80%, and this all depends on the quality of your debtor. So day 30, we're going to advance you 30,000 more. Keep in mind, 50,000 products been made, 30,000 is in your pocket as operating expenses, as cash compensation, as more product you can get on the shelves. We're then going to wait out, Target will say, and they're going to pay us 30 days later. Home Coast is going to retain their fee and remit the balance back to you. That's the typical process, and throughout this whole cycle, you had zero out-of-pocket expenses the entire time. The only thing you have to concentrate on is selling your product, finding buyers for it, taking it to market, tweaking it to make it constantly better. You have overhead expense after the PO turns into an invoice, and now you have a product with a pretty good market footprint, day one and day 60 or 90 without any cash out of pocket.